So what is this Bitcoin halving thing? Why are people in the crypto space so fired up about it? And what does it mean for you? Well, in this video, we're going to cover everything you need to know about the Bitcoin halving process, as well as a few tips on how to profit during Bitcoin's next halving in May of 2020. Coming up. Hey, what's up? It's John from Cheddar, the social network of crypto. And on this channel, we do a lot of cryptocurrency reviews, as well as tips and strategy videos just like this one. So if you're new here, consider subscribing. And at any point during the video, go ahead and check the YouTube description down below in the show notes section, because all the information and resources that we talk about in this video will be listed out right down there, as well as links to the best Bitcoin hardware wallets and discount codes if you're newer to cryptocurrency and just getting started with Bitcoin. So without further ado, let's hop into the video. So what is the Bitcoin halving? Well, it's the programmatic reduction in the number of new Bitcoins that are mined and brought into circulation. And that's kind of a mouthful, so the way that I like to think about it is a bowl and a faucet. So here we have this bowl, which represents the number of Bitcoins that have already been mined and brought into circulation, and they're just sloshing around there. And right now, today, about 17.5 million Bitcoins have been mined as of February 2019. Now, this faucet represents new Bitcoins that are currently being mined and draining into the bowl, essentially being added to circulation. And what happens is, over the course of time, this faucet is slowly being turned off, and this is the Bitcoin halving. So every 4 years, that nozzle gets turned off a little bit more, and a little bit more, until ultimately, over the course of the next century, that nozzle is completely off. There are no more Bitcoins being created and added to circulation, and what we have left in this bowl is our maximum supply of Bitcoins, which is 21 million. That's really the Bitcoin halving in a nutshell. But in order to really understand why it's such a big deal and what it means for you, we have to dig a little bit deeper and set some more context. So I recently put together a video called The Ultimate Bitcoin Review, which I will link up here in the YouTube card. And in that video, we did a complete breakdown of Bitcoin's supply and demand economics, its monetary policy, as well as its limited supply of 21 million coins. So if you haven't yet already, make sure to go ahead and check that out. But to quickly recap, Bitcoin was designed to behave much less like the fiat currencies that we're used to using today, which have inflation built into them, and instead to behave a lot more like a precious metal, such as gold. And similar to the way that gold can't be faked or counterfeited or have its supply artificially increased through, like a chemical reaction, for example, Bitcoins are similarly scarce. Bitcoins are basically the digital equivalent of gold, and many in the industry, including myself, refer to Bitcoin as digital gold because the underlying Bitcoin blockchain ensures those same properties, that Bitcoin cannot be faked, counterfeited, or have the overall supply artificially increased past that 21 million number. So 21 million coins, that's it. And similar to the way that bars of gold enter circulation through the process of physically mining gold from Earth's surface, a process that requires a ton of energy in the form of manpower and also heavy machinery, Bitcoins enter circulation through a similar process called digital mining, which also requires a lot of energy, but this time it comes from computers all around the world, such as, laptops and desktops. Now let's talk a little bit about mining. And again, it's because we're setting context here. And I'm not gonna go through the nitty-gritty of how mining works. All you really need to know is that the Bitcoin blockchain was programmed to operate on a 10-minute interval. And what that means is every 10 minutes, a new block gets mined by one of the miners out there on the Bitcoin network. And what that miner does is takes all the transactions that occurred over the last 10 minutes, stuffs it into that block, packages it up, and adds that block to the chain, hence blockchain. Creative, right? But what is the incentive for a miner to do this? To put out all of that money and electricity costs to, run a computer and mine on the Bitcoin network, to do all of that work of processing transactions and taking these blocks and adding them to the chain. Well, the long of the short of it is that the miner who discovers that next block is rewarded for his or her efforts, and this is known as the block reward. Literally think of it like a competition. Every 10 minutes, according to the heartbeat of the Bitcoin blockchain, all the miners out there on the Bitcoin network are simultaneously competing with each other in order to discover that next block so that they can have the honor of packaging up all of those transactions, adding the block to the chain, and then ultimately claiming their block reward. And back when Bitcoin was initially launched in 2009, the block reward back then was much higher than it is today. And that's because Satoshi Nakamoto, the anonymous creator of Bitcoin, realized that in order for Bitcoin to succeed as a secure form of payment, that the network needed to grow, and it needed to grow fast in order to prevent attack vectors such as double spending coins and 51% attacks on the network, which obviously would be really, really bad. So in other words, Satoshi needed a way to attract a ton of miners to the Bitcoin network, because at the end of the day, the more miners there are, the more hash rate and computational power there is on the network, the more secure it is. And the way that Satoshi went about doing this was in January of 2009, when the network initially launched, he set that block reward to the highest level it's ever been, which was 50 Bitcoins per block. And again, because the Bitcoin blockchain operates on this 10-minute interval, or this 10-minute heartbeat, if you will, that means that 50 new Bitcoins were entering circulation every 10 minutes. Not only was the block reward very high in the early days, but the difficulty of mining or discovering that next block was very low because there wasn't much competition. So this combination of high reward and low competition is what initially attracted so many miners to join the Bitcoin network and essentially turn it into the massively secure system that it is today. And as time has gone on, Bitcoin mining has gotten a lot more competitive. You know, in the early days, it was feasible that you could mine Bitcoin on a laptop or a desktop computer, but these days, mining is so commercialized that in order to compete, you really need specialized hardware. You know, and these are called ASICs, if you've heard that term. And that's essentially like upgrading from a dinky little shovel to now you're excavating with a backhoe. And as time has gone on, the Bitcoin block reward has also changed. And this is because Satoshi is smart. He, she, or they, and let's just refer to Satoshi as they, but they understood that a lot of Bitcoins were needed to be pumped into circulation in order to attract those initial miners to secure the network and get it off the ground. But at the same time, they understood that if supply wasn't controlled, then Bitcoin would just turn into a marginally improved version of the fiat currencies that we use today, because it would have too much inflation built into it, and that would cause Bitcoin to lose its store of value properties. So in order to balance this need for insane network growth with this desire for a limited supply, Satoshi programmed in the halving into the Bitcoin software. And what that means on a more technical level is the block reward gets cut in half. And this happens every 210,000 blocks. And again, like we talked about, because the Bitcoin blockchain operates on this 10-minute interval where it's one block every 10 minutes, thereabouts, if you take 210,000 blocks multiplied by 10 minutes per block, that's how you arrive at that 4-year time frame. So again, every 4 years, thereabouts, a halving occurs. Halving? Halving. Same thing. A halving occurs on the Bitcoin network where the block reward gets cut in half by another 50%. Since Bitcoin's inception in 2009, Bitcoin has already gone through 2 halvings. So again, in 2009, the block reward starts at 50 Bitcoins per block. And then roughly 4 years later, in November of 2012, it gets cut in half, from 50 to 25 Bitcoins per block. And then again in July of 2016, from 25 to 12.5. And then next year, in roughly May of 2020, the third halving will occur, where the block reward on Bitcoin will get slashed again by another 50% from today's 12.5 Bitcoins per block to 6.25. And I think the halving that's built into the Bitcoin software is genius because, again, at the end of the day, it's just mimicking the way that gold works in the physical world. Think about all the gold rushes we've had in the 19th century and even earlier than that across Australia and the Americas. Back then you could just be a guy with a shovel and do pretty well for yourself. But the industry has become so commercialized and competitive that at this point, it takes heavy machinery and you got to dig super deep because pretty much all of Earth's surface has already been scratched. And as time goes on, it just takes a lot more time and energy in order to discover new gold. And generally the amounts that you find are a lot smaller. And this is what causes gold to become increasingly scarce and rare and more valuable over time. And because of the halving that's built into the Bitcoin software, for those same reasons, Bitcoin becomes more scarce, more rare, more valuable, and then ultimately tends to increase in price over time. Now that we're on the topic of price, I want to share with you my personal price prediction for Bitcoin, and as well as some tips on how to profit during Bitcoin's halving, which is coming up in May of next year. And quick disclaimer, I am not a financial advisor. This is not financial advice. This is just my own thoughts and opinions about Bitcoin. And I encourage you to come to your own conclusions before making any investment-related decisions. And with that out of the way, what does halving have to do with Bitcoin price predictions? Well, I, like many in the industry, believe that Bitcoin's halving every 4 years tends to be a major catalyst that kicks Bitcoin into its next bull cycle. And if we think about it purely from a supply and demand point of view, again, this faucet of Bitcoin supply is slowly being turned off, while at the same time, on the demand side, if you look at the underlying technology and if you look at the wallet growth on the actual Bitcoin network, we can measure adoption and we're seeing it increase. And when you have that combination of an increasingly limited supply with radically increasing demand, the only thing that would make sense to happen is for price to go up. It's just basic supply and demand economics. And to illustrate this point with actual data, let's check out the following chart that was put together by a user named LouTrader over on tradingview.com. And I'll link to this down below so you can go ahead and check it out. And what this chart represents is the historical price of Bitcoin from late 2011 all the way up until February of 2019. And it's plotted on a logarithmic scale so that we can see a lot more detail in the curvature of the price. And if we look here at Bitcoin's first halving in November of 2012, let's see if we can make a few observations. And the first observation that I'm making is it looks like the best time to buy Bitcoin in this time period was almost exactly 1 year prior, November of 2011, when the price of Bitcoin was at a low of about $2.50. Now, observation number 2 is that Bitcoin seems to have entered into a pretty healthy bull market heading into its first halving. And observation number 3 is that Bitcoin went bananas right after the halving, hitting new all-time highs of about $1,100 per Bitcoin almost exactly a year after the halving occurred, and this was in November of 2013. So to summarize, Bitcoin bottoms out, enters sustainable growth, has a halving, and then goes absolutely berserk to all-time highs, resulting in an inevitable crash back down to more sustainable levels. And in even simpler terms, the best time to buy was 1 year before the halving, and the best time to sell was 1 year after the halving. And according to my math, if you did that, you locked in 44,000% gains. Let me repeat that, 44,000%. Now, let's take a look at Bitcoin's second halving in July of 2016. What do we notice here? And again, Bitcoin bottoms out almost exactly a year before the halving here in July of 2015 at about $250, and then again starts picking up momentum heading into the halving, and then after the halving goes absolutely berserk to all-time highs, hitting $20,000 per Bitcoin in December of 2017, resulting in an inevitable crash back down to more sustainable levels. And again, had you bought a year before the second halving and then sold a year after the second halving, according to my math, you would have locked in 8,000% gains. Again, not too shabby. And here we are today in February of 2019, after making our way down from that 20,000 all-time high in December of 2017. And just, in about 3 months from now, we're going to be 1 year away from Bitcoin's next halving, which is slated to occur around the May 2020 timeframe. So it all comes down to this. Do you think that history will repeat again? Will Bitcoin's third cycle, which we're currently in, play out similarly to the previous two that we see here in the charts? And I believe so, which is why I'm personally accumulating as much Bitcoin as I can over the course of 2019 and locking in my long-term position. My plan is to hold on to these coins for at least 2 years until we arrive at May of 2021, which again will be 1 year after Bitcoin goes through its third halving. And at that point, then I will decide where I want to take profits. So there you have it. The first time we went through this cycle, if you timed it right, you made 44,000% gains on your money, which is insane. Now, the second time through this cycle, from 2012 through 2016, if you timed that right, you made 8,000% gains on your money, which is a factor of 5 difference from 44,000 to 8,000. And now in this third cycle, if we assume that the potential gain is cut by another factor of 5, from 8,000 down to about 1,600%, then according to my math, that would put a price tag of about 50,000 US dollars per Bitcoin in May of 2021. And that is my personal BTC price prediction, 50,000 US dollars in 2021. So again, if you're new to cryptocurrency and you need help getting up and running with Bitcoin, then definitely check the YouTube description down below in the resources section, because everything you'll need will be right down there, including, my Coinbase discount link where you can save 10% on your first purchase of $100 or more of Bitcoin. And hey, question of the day. Do you think that the Bitcoin cycle will repeat again for a third time? And are these next few months of 2019 the best time to be accumulating Bitcoin? And what is your price prediction for Bitcoin in 2021 and beyond? Let me know in the comment section down below, and I'll see you in the next one.